you really need local money. And if you can get money from somebody who is somewhat well known in the Nigerian market, who might be known to the international crowd, just someone who has a name or a position, that is enormously helpful. Avoid debt, really avoid debt at the seed stage and at the Series A stage. It has to be equity. And if you started a business and it's small, try and get as quickly as you can to revenue generation before you raise money. But if you can't, raise it from local money. What I look for I look at Series A. I don't really want to be early stage, and there's a reason. South Africa economy, which is slightly smaller than Nigeria's, is the size of Tennessee. So if you're going to be a big success in South Africa or Nigeria, you're a big success in Tennessee. Whereas a lot of us investors are looking for international unicorns, billion-dollar companies. Yeah. So for that, you need at least to quickly dominate the local market or have a position in the local market, and then think internationally. The quicker you can think of generating hard currency or international revenues, the more likely you are to attract venture funds and family offices. And I just want to quickly say, family offices are overlooked. Yep. Because we often go from venture capital to private equity to big corporate strategic partners. Yeah. But there are a lot of family offices internationally that have invested in Africa, yeah, or would look at the right opportunities in Africa. What is a family office? There are single family offices and multiple family offices. A single family office is a family that has usually made a lot of money in an industry and either sold out, or where the dividends from that industry are so big that the family office, the place that holds that money, is almost more important than the original business. And that family office job is to deploy the capital to make investments on a portfolio basis. So the money comes usually from one industry, but the family office then has to invest in real estate, in venture, in tech, in whatever industry, and geographically. That's where there's a real opportunity for the entrepreneurs and for the SMEs, family offices. And they're often more comfortable about coming into a Nigeria or a West African opportunity because it's going to be one of a number of investments. They're not committing their lives to it. So don't overlook the family capital opportunity. But you must get local money first and get to the revenue generating point, at which point Lexi and Raj, you will have done your job and I'll step in. Can I just say, Deji, you and I are the only ones wearing traditional outfits. So, and no one's commented how handsome we look.
Honestly, you're looking really good, both of you.
Thank you.
So Deji, you've traveled this journey, and you sort of sit, in that ecosystem, probably more, sort of tech focused and traditional, industry or sector. It'd be good to hear your thoughts. And I read a very, very interesting article this past week in the UK Guardian, where the UK Guardian is talking about capital being available, to a lot of startups. But most of the startups that are getting the multitude of the capital, actually are led by, or founded by non-African founders. And that African founders on average are struggling, quite a bit. I found this really quite interesting, and it'd be good to hear, your thoughts on that, but also, tell us about, what excites you and what you're doing.
Okay.
Maybe if I can weigh in really quickly on that. I don't think that the non-local founder has really been an issue for Nigeria, even if it has for other African countries.
Okay.
Yeah, I mean, I think Lexi is spot on. So obviously, I think in Nigeria, it's a predominant local entrepreneur, local founder space. I'm not sure what the factors are, but I also think based on that article as well, there's just a a large expat community in East Africa. Perhaps that might be a factor. But I think the most overlooked, and this is a critical factor in terms of starting a business, is really the team and then the market opportunity. I think by and large, a lot of entrepreneurs do complain about access to capital, but I think that if it's a real business, if it's a compelling business opportunity, I think capital will flow. Obviously, it's going to take time. It's very difficult to raise money, but at least I'm a living example. When I started my first company in Jobberman that we sold approximately about 2 years ago to a Swiss media company, the very first investor we had to convince was a Nigerian. It was a young Nigerian, made a lot of money in technology, and he was looking for opportunities within the space. And he was the very first person we convinced to raise capital from before we were able to then raise money from institutional and also from international investors. So I do think that there is also a big part of the puzzle that is often overlooked, is in the sense that there's also a big part of training and education that a lot of entrepreneurs do overlook. I mean, you're going into a space and you get into a situation where somebody you're trying to convince to give you money is now educating you about the space or the sector you are playing. I think it's a shame. I think it's an embarrassment, and I think those are the things. Those are the questions that, as entrepreneurs, I think the skills is really critical. On one side, I also think that on the other side, the day you raise money, it then becomes a stewardship. I mean, you are not just accountable to yourself anymore. You are then accountable to a broader group. Okay. And I think that, and this is very important as well, I think it's super important that the day you collect money, you start seeing the money pretty much as a privilege, because you then have to, for every 1 naira you receive, you have to produce 10 naira, 100 naira of that money. Yeah. If you deeply feel that it's impossible, then you should find a way to buy out your investors. Yeah. So I think entrepreneurs, especially at the seed level and at the very early stage, see this as serious business. It's not, it's not a family affair. You do hold your investors and also your stakeholders, that stewardship. And I think one of the things I do stress a lot, two things. One is the skill sets for entrepreneurs, and then the other one is just governance from a very early stage. Because once your house is not in order, very early on, it's very difficult, even if you go PLC or public, for that house to be in order. And I think once we do that, it's also going to, just even from a policy standpoint, even from some of the things that entrepreneurs do spend their time on, you only get sophisticated enough to start understanding that there are a lot of policies in the country that have to change. And it's only then that you start having entrepreneurs that are pushing for some of those policies, and then we then get better organized, as against always screaming and shouting about capital. The problem is not capital, at least in my humble opinion. And just to give you an example as well, I'm starting 2 other platforms, and they do require capital, and raising money, I think, in a COVID era is enormously difficult. So I'm not saying it's going to be easy, and I'm not saying it's easy for other people that have done it successfully. But I think that it's very important to build yourself for that journey. And I think it's a marathon. It's not a sprint. So you definitely need all the nutrition, the nourishment, which I think by and large comes from the skill set. Thank you.
Deji, that's a really, really useful, perspective that you've shared. So quite recently, I've had an opportunity to interact with, a number of entrepreneurs in the space, and I hear something. I don't know whether it's a myth or a reality, but there is, a widely held thought process that with domestic capital, they never achieve the same multiples that they can achieve with international capital. Would you share this perspective, or do you think this isn't necessarily correct?
Well, I think there's an African discount, whether you're raising money. So if you're raising money internationally, you can get better valuation. But obviously, yeah, if you're raising money locally from local investors, obviously you will have to convince them for those types of multiple. But we've also seen situations where some of these rounds of financing situation also have some international investors in those rounds. But in those cases, typically what you then get is the local investors will do pay those multiple if they think that the multiple is justifiable. But also
doesn't it come back to Rob's point, about, really, I think local investors will look for a business that generates revenues, and, clearly has, some clear runway, for growth. And if they do find it, they will pay for it. So perhaps if they're not paying for something, it's actually a reason to be concerned, not to be, going, bullish into that scenario.
Yeah, I think that's very correct. Obviously, if, for example, if there is a price round and the local investors are less bullish, if I were to be an international investors, or if I were to be an international investor, I would be a bit wary, because if the local market is not buying into it, it might be a problematic situation. But I also do think that for a lot of international investors, the story they are buying into is the growth story. Is that this business potentially can go ahead and capture the market, but more importantly, there is also a chance that you can build a franchise, and then you can take the franchise to maybe other markets or other countries. Okay. And then potentially, I think to the point that Lexi and Frizal and Robert have mentioned, it's just there might be an opportunity for an international listing. And if you do get into that interesting situation, obviously the premiums that you can command then becomes higher. So I think that's the perspective a lot of international investors are coming from. But for the local investor, I think a lot of them are coming from the perspective of, okay, maybe the best case is you can list this on the Nigerian Stock Exchange, or maybe you can raise a commercial paper down the line, or tap the capital market through the FMDQ at some point.
I think when you say maybe the best cases, and you look at local examples like Dangote, then I think perhaps you're not being fair to, what that potentially can be, for domestic entrepreneurs.
No, I'm actually not discounting. I'm not discounting the depth and also the relevance of the local capital markets. And I think that when you look at the FMDQ, for example, it shows how much activity, how much liquidity, and how much capital actually is available in the Nigerian market. One of the questions I've always asked myself, and maybe this is a good place to openly share this, is what will that structure look like? Can we have an FMDQ type structure for early stage, maybe growth stage companies, not just in tech, but across board, where you have the opportunity to be able to get some capital? And if it is well put together, well packaged, you have a compelling business proposition. And more importantly, I think in Nigeria, you just have to be making money. I think the market will back it, and then they will pay the premium.
I think one of the relevant points that Lexi has asked today, for example, is, how do we begin to get, for example, something happening around venture debt, which, quite frankly, ideally needs to be in local currency. Otherwise, it becomes, some kind of death spiral convertible for the local companies that, you've given it to. And I think those opportunities exist. I just think that, there is a whole and necessary, perhaps, I would say, education process between the sector and Nigeria's financing markets. And quite frankly, if Nigeria's financing markets don't understand the opportunity, they're not even able to become a significant risk mitigant for international capital that wants to come in. The way you must think about Nigeria is that there are some investors who've been here 50 to 70 years. They make a 25% return, every year, running very basic, very traditional businesses called, multinational companies, right? And, take off, the blinkers and just look at those businesses and say, why do they work? They work first and foremost because by and large, they recognize that they sit in a weaker currency. So they price in 8 to 10% currency devaluation every year. They borrow in domestic currency as much as possible. So they utilize the banks, they utilize domestic capital markets. They have an investor base, which includes domestic and international investors, right? And if we think about all of those reasons why they've succeeded and they continue to do well over a lengthy period of time, I think that, for those of us who are financial sponsors or investors looking to get capital into SMEs, into venture debt, there's a lot that we can learn in what those companies do. Yeah. Let me come back to Raj because, beyond, Raj's daytime job is like many of us, he has a few nighttime jobs as well. And he has an interesting perspective on, on this startup sector. And I'm going to begin to sort of round up, here. I want to leave a bit of time for us to deal with, some audience questions. So Raj, I'm going to ask you, what excites you most? And I'm going to come around to each of the other panelists around the markets, around the sectors. And if there are 2-3 things, that you'd like to keep us sort of focused on and looking at over the next 36 months, what would they be?
Sure. First of all, listen, I learned that I needed to have a side hustle or a night job when I first came to Nigeria in 2000.
We all do.
So I've just learned from the best, right?
Yeah.
So let me break down your questions into a number of different areas. So the thing that is getting me excited and sort of is my side hustle a little bit is trying to create or advise on a seed stage venture capital fund for Pan-Africa. And what I see, and this is something that I've discussed with Rob and Lexi, is there's a massive funding gap. And again, what Adeji said is also interesting, right? So there's a massive funding gap at that seed stage, right? I think you're right that if you can get a local entrepreneur to back you, that actually helps hugely. But there isn't enough institutional capital and organized capital at that seed stage. And valuations, and again, we can talk about valuations and seed stage across Pan-Africa, but I certainly see Pan-Africa and also Nigeria, valuations at seed stage are low. And once you get up the scale, series A, B, C, D, they become much more like US, UK, Asia valuations, especially because there's so much capital at that stage, and both African capital and international capital, right? So, someone like Rob sitting in Cape Town will happily invest in a series A in Dakar or Nigeria or whatever, right? He doesn't care where you are, right? So there's a lot of capital there. So seed stage, there's hardly any. And what I think the opportunity is, if you can institutionalize seed capital at that stage, and you can exit at Series A, you can then recycle capital quite quickly. That's my personal opinion, and be good to have things. What I'm seeing that's exciting is that, in some ways, COVID has been, whilst all the negative impact of COVID we're all aware of, death and starvation, all the rest of it, some of the pictures coming out of South Africa are horrendous. Forget South Africa, look at other places, right? But it has accelerated digitization and technology across Africa. And I'm seeing this, just normal stuff, like people don't want to handle money anymore, right? So you're forced to do that. Look, my parents were 85 years old, right, are doing things they never would have done pre-COVID just because they're forced to. And that's what I'm seeing in Africa today. So edutech is really exciting. Medtech is really exciting. I mean, fintech's obviously been there for a while, but I think you're seeing the second generation of fintech companies, right? So that's also exciting. Logistics, how do you move people around? We looked at a company in Mali about 6 months ago, where they were basically doing scooters, taking people around. COVID hit, and their revenue fell by 90%. But because they're a technology company, because they're young, they're agile, they're nimble, they could quickly switch around, start delivering food, right? And they're back up to 100%. So that ability, that entrepreneurial skill that you find, whether it's in Lagos or Abuja or wherever in Nigeria, what Rob said earlier was that, one of the greatest skills of Nigeria is its population and its entrepreneurial skills, right? That ability to just, no matter what happens, you can somehow duck and dive and create something. That is the biggest asset. And that's what I think is most exciting about this space in Nigeria. One other thing I would say is that if you go up the scale, right? So now you're seeing things like power sector, where the power sector, as you know, is in Nigeria, and I've been doing power for 20 years now. It's a mess, and we all know it's a mess. No matter what Rob says that it's getting better, it's not. It's not getting better in South Africa. It's not getting better in Nigeria. It's just not, right? Nothing has changed. There's a diesel cartel we all know about. Let's not talk about that right today, etc., etc. But what is happening today is disaggregation of power, and with that, you're actually changing lives, right? So be able to have mini grids, off grid. I'm just investing in a company that basically does desalination from solar panels with no impact on the environment. So that those kind of technology solutions are going to change the power sector, and the ability for local entrepreneurs who understand the local landscape and take technology, hardware, software, etc., from outside the country and apply it to a local situation. I think that's what's exciting. And smart people, I'm never going to be able to sit in London or Rob in Cape Town and come up with a solution for Nigeria. We're never going to be able to. You just don't understand it, right? And that's the exciting piece for me.
Thank you very, very much, Rob. I must apologize most sincerely. I do have a panelist who I think joined us a little later, Dr. Chinedu Zephaniah from the Central Bank of Nigeria, and the Central Bank has really played, quite a significant role in terms of providing a number of intervention or subsidized, type funds, either directly, or through the BOI and the banking sector to SMEs, to women entrepreneurs, and there's been a very, very substantial use, of the central bank's balance sheets in this area. And it'd be good to hear from you, some of that thought. I mean, from the central bank's, viewpoint, what else you can do, and welcome. I'll come back to the other panelists on those summation points.
Thank you, Bolaji. It's been very illuminating. I wish you could see my notes from where you all are seated, because somehow you are operating as a regulator, and if you're not careful, you drift into the realm of thinking you know it all. Today's discussions have taught me a whole lot, especially from hearing from Robert and Raj, and of course, Lexi. Thank you so much. You see, I believe the challenge of raising funds all over Africa is similar. The key thing is there is an entrepreneur at one end. The skill is there, the passion is there, but the funding sources in Nigeria, I mean from the financial system, would require that entrepreneur to place a certain amount of collateral on the table. Because of our level of infrastructure, the interest rate is above the roof, and what have you. I mean, these are challenges that everyone on the panel knows. But what the central bank has done is to find a way through the banks, deploy regulatory forbearance in the wake of COVID-19, find a way to not just lending from our balance sheet, to bring out policies that create an enabling environment in which a bank that is committed to funding the real sector would find opportunities to play. And if in so doing, you have some discomfort, I would say discomfort, the central bank will come and bail out. And having said this, beyond those policies that look at the entire financial system space, we have had to do some things like other central banks of the world. The key one right now is what we are doing for COVID-19 for manufacturing, for those in the manufacturing space. Two speakers here today have spoken about beneficiation. Until Africa, Nigeria in particular, is able to add value to what we export, we will continue to grope in the dark in terms of development. So the CBN has brought out a real sector support facility that targets manufacturers in this COVID era. It's an opportunity for every manufacturer, the top tier manufacturers, to access funding from the central bank to engage long-term for manufacturing. I forgot to speak about that as well. It's not just about the funding, the rate of the funding, of course, the tenor of the funding, because the financial system is filled with preponderance of liability that is short tenured. And so for all the interventions from Development Finance Department of the CBN are such that allow a long time for the entrepreneur to utilize this fund and be able to make some money before he's asked to repay them. So, and then for beyond the large scale manufacturers that will need to access finance to import equipment, there is also targeted facilities for small and medium tier operators in the space. There is a COVID-19 loan for households, COVID-19 loan for small businesses, COVID-19 loan for the larger businesses, and other array of businesses. The point I'm trying to make is that we quite understand that everybody who needs a loan in Nigeria, who has the skill, would be asked to bring some stringent requirements before you can access this. And so the central bank is playing the big brother role by providing those funds long-term, finds a way around the unconventional, around the conventional collateral structure to make sure that the three basic tiers of entrepreneurs, the big boys, the medium tier, and the small scale people are able to access at a single digit interest rate and for long term. Balaji.
You're on mute, Balaji.
Pardon me, I'm so sorry, I was speaking on mute. Thank you very, very much. I think, that background is, really quite helpful. And, in many respects, we continue to see, the central bank really stepping in the gap, quite often, and creating, a number of platforms, obviously all debt, what we need to do is to ensure that we can bridge that gap with some equity. But perhaps it's a good time to come to Lexi now. And Lexi, as you round up, what excites you around the market, and what are some of the things you're focused on over the next 3 years?
Yeah, absolutely. So I'll be a little bit concise because I know we're short on time, but very much echoing Raj's comments on opportunities of early stage investments. I think being local, you see a lot of deals quite early from very strong founders before they do market their business to an international audience. And different to Raj, we feel that the most competitive companies, you have a very difficult time getting involved in a meaningful way in the Series A or Series B stage unless you already have a position that you're able to protect from the seed stage. So we're looking at investing in many companies in the pre-seed or seed rounds and leveraging the most successful companies through their growth rounds of Series A and Series B. And the verticals, the sub-verticals that we're most excited about, still fintech, still believe that there's a lot of problems to solve in that space, and even probably some aggregation and consolidation that we're quite interested in. But we also really love solutions that are enabling pan-continental trade. Rob mentioned that you really can't be a one-country solution on the continent. And we're looking for companies that are really enabling that within the informal sector for large enterprises and also cross-border companies. And during this time, also looking at solutions that have really helped a lot of these traditional enterprise companies move to the digital space, whether that's managing their inventory or managing their workforce that is increasingly working from a remote environment. And we love soft infrastructure solutions. So for that, it means really we love things around KYC, identity, data insights, and kind of the back-end infrastructure that's really driving financial access. So we love payments infrastructure as well. Those are the key things that we're really looking for. And I put in an email that any entrepreneurs can send their pitch decks to into the chat. So I'd love to hear from any of those ventures.
Great. Thank you, Lexi. And Faisal, it'd be good to get some closing thoughts from you.
Yeah, I think, thanks, Baloji. I think from my side, the exciting thing for us and for us as a jurisdiction is the excitement. And I'm so thrilled at the discussion that Ayodeji led around stewardship, around the future of Africa. We firmly believe the future of Africa is in African hands. The money may come from investors that are outside Africa, but it is going to be businesses that are sitting right now in our audiences with that idea, looking for that seed money, that are going to be the big unicorns, as Rob says, of the future. And we are very excited. We know the typical investor is young, tech savvy, very ethical minded, wants to give back, wants to make something of their own community, wider community, whether it's within their own locality, nationally, or indeed Pan-African. And they're increasingly they have a global outlook. Jersey provides that platform, that partnership, that collaboration, gives them that access and comfort to know that they get these world-class partners that come and work with them to develop their ideas, to make their businesses, their investments a success. And at one point, even when they want to exit, Bolaji, these businesses can exit through international markets, whether it's the London Stock Exchange. I know Ayodeji talked about the Nigerian local market, but you come use a Jersey platform. Jersey entities are now listed in both the main markets in London, in New York, in France, in Hong Kong. So that platform allows you to exit when that time comes, or gives you the comfort to be able to take your business to the next level. The excitement is going to be driven by Africans, is going to be made by Africans, and is going to be celebrated by Africans.
Thanks very much. I think the message there is really about the opportunity available in Jersey. Like Rob, I know Jersey as well, and I think there are many benefits for utilizing that particular destination. Ayodeji, what excites you, and what's keeping you busy?
So I think for me, the most exciting thing, and I hope I'm lucky enough to be able to leave the dream, is pretty much launching or pretty much building a Nigerian company that I can obviously take to the rest of the world. And I think that one of the maybe the best businesses that have been able to withstand the devaluation, I think, Balaji, like you mentioned, are some of the multinationals, and how they are multinationals. They had and add currencies, but locally they finance operations locally. But I also do think that it's about time that we start building institutions, and not just building companies to be able to feed our families. So building institutions that become multi-generational, and institutions that you can take to the rest of the world, not just to the rest of Africa. I think over the last 25 years, with the wave of banking, a lot of the banks have now expanded to other parts of Africa. But I think for me, over the next 10 years is how can we take some of this homegrown local brands to the rest of the world. So, and one of the things I'm working on, hopefully we hope to be able to do just that. And if we are lucky enough to also get listed on not just on the Nigerian Stock Exchange, but also internationally on a stock exchange, maybe in Europe or the US. So I think it's about time we start building institutions.
Great. I think sometimes it's we perhaps forget how short our formal entrepreneurial history is as a country. Loads of informal businesses up to past independence, but to a large extent, when you begin to think about formal entrepreneurial businesses owned by Nigerians, this started very much around the banking sector in the early 80s, and that's not even 40 years ago. When you think about the next generation of entrepreneurship, the first Nigerian owners around the oil industry, Niger Delta exploration and production, Oando are babies of the 90s. So in some respects, it's important always to sort of keep that perspective in mind. We're trying to do in 25, 30 years quite aggressively what other parts of the world have had 100 years plus to do. And we will do it with some learning pains, and we will pay some school fees. But I also think that the output and the outcomes are going to be very, very exciting, over the next 25 to 30 years. Dr. Zephaniah, let me take a last word from you.
Okay, thank you, Bolaji. Well, simple. Nigerian businesses need to understand that capital is not like buying a box of chocolate off the counter. When you want somebody to invest in your business, I'm speaking from the perspective of a financial institution, the numbers have to add up. They are not there as a social institution. They are there for business. There are regulatory framework guiding their operations, particularly as it relates to lending. And when those businesses have the right structure, the potentials are good. When they try and they are not able to succeed with their bankers, the central bank would help out. But there is a proviso to that. Even the central bank will want this money to be paid back. Otherwise, the balance sheet of the bank will be eroded. And so finance is for businesses that are at the top best, survival of the fittest. And even when the central bank intervenes, we want those loans to be paid back. And finally, I'd like to say that the balance sheet of the central bank is not limitless. We can only do so much. When we hear people say, do you really have this intervention? We hear it on the radio, it doesn't get to everyone. There is no way to get to everyone. Thank you very much.
Thank you very, very much. I'm hoping that I've left a bit of time for a couple of responses to questions on the chat. Rob, go ahead, please.
I'll be very quick on this one. Raj has got Launch Africa and the Nest. Lexi has capital available. I have a Series A profiling business called the Lion Cage, and I've put in the Zoom webinar chat an invitation. In 2 hours' time, we're profiling 2 companies on the Lion Cage. It's I think our 28th company we're profiling. And in many cases, we show companies that don't need to look for money, but are looking to expand internationally and looking for partnerships and relationships. So what we need to do as Africans is promote success stories. There's so many from Nigeria, West Africa, South Africa, Ethiopia, Rwanda, Kenya, and we need to find a way to pull together and promote the success stories of Africa that go from nothing to early stage investment to Series A, and maybe they're at Series A right now, but they could be international businesses. There are so many just waiting for us to discover them and take them to the next level. And the capital is available. The capital is available. So, Raj, you've got, let's at least show everyone where to position their stories. I'm Series A, but Raj and Lexi are early stage. And what I like is tech, and Balaji, you correctly said, and it's lovely seeing you again, by the way, you correctly said, there's opportunity and there's money, but what we've got to do is leapfrog what you mentioned, that we're 100 years behind or 50 or 30, it doesn't matter. We have creativity, intellect, and the capital is available. Let's leapfrog the old businesses.
Absolutely.
Let's do it. We've got a real chance to do so.
Very, very much so. Thank you, Rob. And all of you, thank you, I think, firstly, for sharing emails and contacts. I'm a betting man, and I believe you're all going to find 25 to 30 proposals on your emails, over the next 24 hours. I think you'll figure out the real entrepreneurial character of all of our listeners. I think it's a good time, if you agree with me, for us to try and deal with a couple of questions that have come on the chat. And, Obinna and Dr. Alabi, you've been studying the chat perhaps, much better than I have. Please help us with any questions that you think the panelists should respond to. I think most people would like a copy of Rob's presentation. Most of the
Bolaji, can I do a quick plug for the Nest?
Yes, of course.
So the Nest, a bit like Rob's Lionsgate, the Nest is a online Zoom, effectively like a Dragon's Den or what's the one, Shark's Tank in the US.
Yep.
So basically every week on Thursdays, we have 2 companies pitching to 3 angels. And I think that's a great resource for people to just see what it's like, because these companies have been curated, right? So you have to go through a selection process to get to the Nest. This week, it's quite exciting because one of the companies I invested in called AMP, which is doing something called Mike Africa, which is to showcase urban culture and urban music across Africa in 6 different countries, is going to be presenting to a panel which includes Wyclef Jean from the Fugees. I don't know whether you remember the Fugees or not. So please tune in. I've sent details on the chat. Again, it's a great opportunity to see what you can see entrepreneurship at work. And perhaps one parting comment from me, from what Ayodeji, I really liked a lot of the stuff that Ayodeji said. It really resonated with me. And I like the fact that he said that as an entrepreneur, I'm a steward of your money. And I take your money, I have to keep you engaged, I have to make you money and return back. So I'm not doing you any favors. You know, you're giving me money, I have to steward that money and keep you engaged and make you money and give it back to you. And I think that is a sign of a good entrepreneur.
Mm-hmm. Great.
Okay, sorry, Bolaji, I don't know whether you want me to.
Yeah, go ahead, please, Obina.
Okay, thank you all. Thank you, distinguished panelists and our guest speaker. I think this question is from the chairman of the Nigerian Stock Exchange, Mr. Bimbolo Gubanjo. It says, and this is to Mr. Adewumi, it says the growth board at the Nigerian Stock Exchange was established purely for fast growth, early stage SME companies. And so what you're aspiring FMDQ to develop is already in existence at the Nigerian Stock Exchange. And I would encourage you and other SMEs to look closer at a growth board listing. If you feel there are any constraints to raising capital via this route, you should please share it here so that we can all be the more knowledgeable for it. Thank you.
I think that's a very important indication of some of the work that's already going on, in domestic markets, really around, growth companies. Any other questions or comments?
Yes. Yes, sir. There's another one. This fellow is an anonymous participant. He or she wants to know how NGOs can benefit from the subject of discussion today. And the second one is about the CBN's intervention on the Forex crisis and how to allay the fears of foreign investors. So those are the two questions.
Okay. So I think a lot of NGOs to a large extent are really reliant on, philanthropic capital. Some of that philanthropic capital is provided by, family offices, or in some instances where they're organized, around foundations, and
I was going to say, just on that first part, I'll also add, actually, from a Jersey perspective, and also other international financial centers, is impact funding. And impact funding is quite a unique phenomenon. It is it's significantly growing within the continent. And impact funding is around social development goals, and non-governmental organizations that fit that bill have access to this impact funding that gives the investors a commercial return, but serves that altruistic purpose. So that also area is also unique.
So it's a very good point you make, actually, and that's one of the interesting things about our market is that every large entrepreneur or every large business in Nigeria that develops to a large extent simply because you live in a country where there's so much need around you, simply because everybody is minded about the extent of poverty around you, without actually realizing it or advertising it. Almost every business here or every large, financial institution is an impact investor. When you, begin to let businesses like Dangote understand, a bit more about, what impact investing is about, or Lafarge, or, any of your largest banks, or even businesses like ours, you will find that everything, that all of us do is focused on job creation. We're very focused on gender. We're very focused on accelerating infrastructure. Every single thing that you do, if you're a large business and you live in a market like this, actually has a big impact element to it. We just all didn't understand, the technicality and the nuances and applying that language. But the largest entrepreneurs and merchant businesses, here are probably some of the biggest impact investors on the continent, and on a scale far beyond, any dollars that are coming in from outside, other than foundations like the Bill and Melinda Gates, Foundation, which are very substantial here.
I think, Bolaji, just to add on that, I think it is quite interesting from an African perspective that the conversation has shifted. So, the pride of the African is that, give me your money, but, you can have a commercial return on it. And you may help me in my journey, but actually I don't want it for free. I want to give you a return. And, just touching on what Raj said about Ayodeji's stewardship comment is exactly that, right? The mind shift.
Very much so. Any other questions?
Sorry, Bolaji, can Adil me respond, to that question? So,
the question specifically on the growth board of the stock exchange.
Growth board, yes, to see where you can raise, whether there are any issues or challenges,
No, I think, frankly, I think the growth board, I think it's been around for maybe the last 3 to 5 years. I think that people do know that there is such solution out there. But I also do think that there is opportunity for obviously management and stakeholders at the Nigerian Stock Exchange to maybe specifically target some of those companies specifically, just in terms of getting them to list. So I do think that there's it's not a criticism. I just think that there is much more that can happen from that perspective. And one of the best ways to achieve progress is when you find examples of other contemporaries or peers that are doing this type of listings. It will definitely create that momentum required in the market. But I also do think that there's another camp, and that camp is a broader and larger camp than my own camp. And they have no idea that there's a growth board on the NSE. Yes, on the Nigerian Stock Exchange. So I think the summary of everything I'm saying is there is definitely opportunity for them to pretty much reach out specifically to some of those companies in specific industries that they can attract. So yeah.
Well, panelists, ladies and gentlemen, very distinguished guest speaker. I was hoping to be able to bring this in on time today. I'm running probably, 5-6 minutes later than I would have hoped. Let me thank you all. I think it's been an extremely exciting, conversation. It's certainly something that we should, find another opportunity, certainly to extend. And I'd like to thank, our hosts, the LCCI and Jersey Finance, who have co-collaborated on this. I think it's been an extremely useful platform. And let me now hand back to Dr. Segun Alabi. My name is Bolaji Balogun. Very delighted to have done this.
Thank you very much, sir, our panel moderator for today. We have enjoyed every bit of the panel discussion. We want to use this opportunity to appreciate everyone, but to do justice to that and also to bring everything to a close, it's my pleasure to warmly welcome the chairman of the LCCI group in the person of Mr. Obina Ayam. Please move the closing remarks and the vote of thanks. Mr. Chairman, over to you, sir.
Thank you, Dr. Alabi. And I would like to thank our panelists and our keynote speaker. But most importantly, I think we've all enjoyed the quite illuminating session we've had. We'll graciously thank our dear President, Mrs. Tokima Gobunje, for her inspirational leadership, and thanks to our Vice President, Mrs. Mojishola Bakari, for standing in for our President. Our able Director General, Dr. Muda Yusuf, for his wonderful support always. Jersey Finance Strategic Partner to Commonwealth Enterprise and Investment Council for the wonderful collaboration at this event. With special thanks to Mr. Alan Wood, Global Head Business Development, Jersey Finance, our keynote speaker of today, Mr. Robert Hessop, all our distinguished panelists, Mr. Faiz Obana, Ms. Lexi Noviski, Mr. Raj Kola Simgam, Mr. Ayodeji Adewumi, Mr. Yusuf Philip Yila. Thanks to Dr. Chinedu Zephaniah for representing Mr. Yila. Our moderator of today, Mr. Bolaji Balogu, thank you very much. And of course, you, Dr. Shegu Alabi, our anchor for today. We thank you sincerely. And thank you to my superb ESCO members and our financial services group members for all the hard work and your kind support. For non-members that have joined us today, thank you all. We encourage you to join the Lagos Chamber of Commerce and Industry and surely give your business the advantage it needs to win. Once again, I would like to thank everyone. Thank you and God bless. And also we hope to see you sometime soon. Thank you very much.
Thank you, and stay safe.
Stay safe.
Thanks.
And on that note, we have come to the end of this exciting, wonderful international webinar on access to finance and funding for Nigerian businesses. Once again, on behalf of the President of the Lagos Chamber of Commerce and Industry, Mrs. Tokima Gobunje, we want to say thank you and God bless you. Bye.
Bye.
Thank you, Balaji. Thanks everyone.
Balaji. Thanks, Rob.
Speak
Bye.
soon.
See you soon.
Raj, take care.
Take
Bye.
care. Take care.
Bye.
Bye. Out.